when Craig worked in fixed income mortgages on the West Coast at Witter and Oppenheimer, and now he's in Denver. He's the managing partner, managing director of Proprietary Capital, which is a mortgage product hedge fund. And one of his idea, which I thought was really brilliant, was to walk everybody through how to use Bloomberg. It's an outstanding product, and the resources there are really interesting. And before he gets started, I want to introduce Peter McKay, who's our business librarian, who knows a lot about that. He's going to tell you a little bit about where to find the Bloomberg Terminal in our library and some of the tutorials and sessions we're going to have to use that coming up. Peter?
Okay, we have one Bloomberg Terminal. It's located on the 3rd floor over in Library West. You're free to walk up and use it at any time. There are occasions when there are class assignments and we actually have sign-up sheets. We just installed the Bloomberg keyboard, so that should make it a lot easier to use the terminal. You can actually take self-paced certification courses on Bloomberg. If you want additional information about it, feel free to contact me. My telephone number is 273-2634. My email is bzmckay@ufl.edu. And my office is on the 5th floor in Library West, 513 Library West. I am talking to our Bloomberg reps about possibly bringing a rep here to do a training for the Student Finance Association. And that will be an open meeting. So we're working on that.
Yeah, if you have an opportunity, if you're interested in any of the Bloomberg reps' presentations, if they come to Gainesville, we can usually get them here. I would suggest you just send an email to Kelly Herring, who does the admissions for the MSF program and the other administrators. So just send an email saying, put me on the list when the Bloomberg presentation is, and we'll forward that list to Peter, and we can get you notified when that happens. Craig, do you want to take questions any time? Or?
Sure.
All right.
Good afternoon. Before we start, I'd like to just poll everybody with one quick question. Oop. Which event do you think will happen next? Dow Jones trades at 13,500, Fed funds rate trades at 4%, or Bobby Bowden retires? Anybody want to guess? I bet number one happens last. And I'm hoping that number two happens first. I graduated from at 1983 with an undergraduate degree. I moved to Los Angeles. I was a mortgage salesman in the mid-'80s. Started managing money in the early '90s. Started a mortgage hedge fund in 1997. So we're almost at our 10-year anniversary. I've been using Bloomberg basically for since 1987. Before Al Gore claimed that he invented the internet, before email was destroyed overnight shipping, and before the Florida Gators won either a football or a basketball championship, the real-time institutional quality research or financial information was really a closed society. It's not on? Is this working? Wall Street firms in the 80s and early 90s offered their research and proprietary analytics only to their most active clients. Most of the time it was via modems. I was on the bond side. If we had an offering and one of our clients wanted to see analytics on that offering, they would go into our system. Most of the time the analytics were canned, which meant that the user really couldn't manipulate the data all that much. So their information was basically what we gave them. It really made size a big limitation. You needed to be a large enough institution to trade with all the firms on the street, or you wouldn't be able to get all their research or all their analytics. That all changed in the mid-'80s. Michael Bloomberg, who was the head of IT for Salomon Brothers, created the Bloomberg Terminal. At Dean Witter, we were the first major Wall Street firm, aside from Merrill Lynch, to use the Bloomberg Terminal. That was in 1987. The purpose of the terminal was to provide a universal financial database and analytics system. Today there are approximately 300,000 users. Most of the users are institutional, and they're either investors or Wall Street dealers. And like Peter said earlier, there is a Bloomberg Terminal in Library West. And what this really means is that the Bloomberg Terminal is the most widely used financial analysis and database tool in the world today. And when I graduated from the University of Florida, we had a Wall Street Journal, we had a financial news network that really just catered to municipal buyers, and we had textbooks. Everybody here today has access to the same analytics and the same information that some of the most sophisticated and well-known investors in the world have. So I would highly encourage that you take a look at it. The Bloomberg system has multiple features. Number one, it probably has the most extensive news database around today. You can monitor markets in pretty much every financial market, live markets. You can do research on statistics. You can do research on companies. You can do research on the Federal Reserve. You can do analysis on a security by security basis. You can analyze your portfolio as a whole. And lately it's become one of the better communication systems that we have as institutional investors. We communicate with the street on a, pretty much on an ongoing basis. There are 12 function keys. We really use mostly 10 of them. The easiest way to, when you're on Bloomberg, is just type a function key and hit go. It's a pretty intuitive system. So if you hit government go, what happened? You have to reload. Sorry, guys. I'm having a little bit of a problem. Can you talk to him for a second? Okay. I don't know. Figures. Does he have, can he get me on,
one of the things that I always find real interesting is magazine.
do you have, not really working right now, do you have a,
There's a lot of stories in it.
I do. I don't think it'll work. I don't think so.
And in the story, I'll try to find
Do you need a telephone?
And we'll have a story about some topical economic issue. Like here's one on oil prices and oil consumption. Right? There's a box here that says you want to know exactly how many million barrels of oil China imports from every country in the world. Find that out. All the data we can see about. Magazine story is pretty interesting. Got it?
Yeah, we're having a little problem. It's not holding a connection. So, maybe 5 minutes. You guys impressed yet?
Belinda said any computer person who's out there, we're having serious problems with the presentation. It's in progress with the guest speaker on Student 104. Can anyone help us? Anyone, please help. Student 104. This is Belinda and Student 104. We're having major problems with the guest speaker's presentation. Is there anyone who can help us? Anyone can come right away. That would be greatly appreciated.
Someone's on their way.
Hello. Welcome to Bloomberg Anywhere.
It's not stable.
He's here. Thank you.
Okay, let's try it. Working. We're back. So basically, if you hit one of the function keys and go, you can basically start to navigate through the system. If you wanted to hit a current market in governments, just you would go to the world bond markets. If you wanted, whenever you go out of a function or you want to move back to a menu, you just hit the menu button, which I think is end. So anyway, we've got a government code. All government securities will be basically keyed off of the F2 button. You have corporate bonds, which are F3, mortgages, which are F4, money market F5, municipal F6. You have preferreds, equities, commodity, and index, and currency. The F12 button is mostly client, and it's for portfolio analytics. And actually, my company does not use the Bloomberg Portfolio Analytics. Like I said earlier, it's probably the most sophisticated news marketplace. You can find news on anything that you would like. When I go first thing in the morning, I come into the office and I type in top. That's the top stories. And it's always changing. First thing in the morning, a lot of times you'll see data from Asia or Europe. Now, since we're halfway through the trading day, we're going to see data that's mostly in the United States. If you wanted actually to do top bond news, you would type TOPBON. And it's all the top bond news. Top stock is TOPSTK. You also can view the most popular or most widely read stories on Bloomberg this day. Type in READ, which is read. And these are the last 8 hours. You can actually change your query. It's pretty easy to navigate through. If you wanted to pull up news on IBM, any equity, you type in the ticker symbol, IBM, you hit the F8, which is the function key, and you hit CN, current news. These are all the stories on IBM. And you can see that first page is not even one full day. If you wanted to see all the news headlines of the day, and Bloomberg has a scrolling news feature, and this is basically real time. Hit NH for news headlines. But the easiest way when you're starting out with Bloomberg, if you want to see all the news functions, just type in NGO. And it essentially will give you all the different categories for you to look up information. If you wanted economic data, if you wanted corporate data, just basically follow the menu. We also use Bloomberg really to follow all current markets. If you type in IM, it will give you countries from all over the world. If you wanted to see their bond markets, then their money markets, like let's just say Belgium, you would type in BTMM BE. These are all current. Now Belgium's closed right now, but if Belgium was still trading, you would actually see some blinking, which we're seeing right now, so there must be a little bit of trading that's going on. We trade mortgage securities, so we watch mortgage quotes. This is real time, trades all day.
Who provides those trades?
The BTMM, which is, I believe, are provided from dealers. Bloomberg is now starting to move. It used to be just composite quotes, but now they're moving to having contributed quotes. So Wall Street firms are all giving bid and offer prices, and they just aggregate those prices. If you wanted to see U.S. Treasuries, you hit USD. Let's just say you wanted to see information on a particular stock. I'll go back to IBM. IBM, whenever you type in a stock, you have to hit F8 for the equity function key and just hit Q. Or if you wanted to, this is IBM's graph intraday. So this is how it's been trading today, GIP. If you wanted to see the last 2 days, type in GIP2. The last 5 days, GIP5. So anyway, Bloomberg it follows every market that we watch. Commodities markets, foreign exchange markets, municipal markets, corporate bonds, governments, mortgages, money markets, preferreds. Let's just say you wanted to look up another thing that we do first thing in the morning is we want to see where the markets were trading overnight. We go to the World Equity Index Monitor. So essentially it tells you where Asia and Pacific closed, where Europe, Africa, the Middle East, or the Americas. If you wanted to see more of what's in North America, you would just type in one go, just follow the cursor. If you wanted, let's just say you wanted to look at the Dow Jones today, and you wanted to say what's moving the Dow Jones, you go to INDU, or you can go to the WEI and click on the Dow Jones, and then just type in IMOV, which is index movers. And it will show you a graph of the Dow. It will show you what's contributing to it being up, what's contributing it, what's taking away from it today. it doesn't like that one. Sure. BTMM. So your Bloomberg is going to default to a US Bloomberg. So if you just type in BTMM, it will be the US BTMM. And that will give you money market rates, repo rates, swap rates, treasuries. You remember the teller rate from a long time ago? The BTMM is basically Bloomberg's version of the teller rate, page 8. I'm not real good when it comes to equity, so please hold your equity questions. But you can get options valuations. You can do break-even analysis. Basically, type in a ticker symbol, hit the F8 button, and just walk through it, and you'll be able to find things. Bloomberg also is a machine that we found that we do most of our research, our analytics through. You can do fundamental equity analysis. So let's go back to IBM. This is IBM's most recent 5 years, all financial information. If you wanted to look up historical pricing, just type in GP. It's a historical price graph. If you wanted to see it in tabular form, you would hit HP. If you wanted to look up information on the Fed, you would type in FOMC. You can pull up the Fed's most recent statement. Maybe not online. Yeah, basically they line up the two statements, the last statement and the current statement, and they show any differences. Oops. We're having a glitch again. You may have to talk again. It's frozen. Where's the tech guy? I think I should do it here.
Yeah.
Why don't you shut that off? Because if for whatever reason it's having some issues.
You can use it off here.
Mm-hmm.
You can use it off the computer and it won't drop off the internet, so we'll be able to go.
I don't know what happened. Is he coming back? Why don't you guys ask questions while we're having a little temporary glitch? Well, that's right now the system that you have available at the university is a read-only system. The question was, is Bloomberg, can you download data from Bloomberg and actually then put it into your own analytic systems? And the answer is yes. The tool that you have at the library, though, And I think at most universities, because it's used by multiple parties, does not allow for data downloads. But Bloomberg has a new system which basically allows you to dynamically link all the Bloomberg information to Excel spreadsheets. And we can link economic statistics. We can basically create our own calculation overrides. We can do horizon analysis. So anything that you can do on Bloomberg, you can actually run in Excel. Unfortunately, the system at the university doesn't allow for that right now. It does? Okay. I was told it didn't. Okay. Now, what you can do, though, is, and I was going to get into it, Bloomberg is also a communication tool. If you have a story on Bloomberg, if you hit 99 go, you can email that story to yourself. If you go to a historical pricing of IBM, you can take a snapshot of that information and you can send it in a JPEG format. It's not all that usable, but at least you can get the information to you via some communication system. I think you can do 99. If you pulled something on the screen, you have to basically type grab. So it grabs, it takes that screenshot, you grab it, and then you can either send it to another Bloomberg user, or you can essentially, you can email it to somebody, anybody.
So you're on your laptop.
Okay. That one's still up there.
No, this is the laptop. It's on the so you'll control it here, just on that screen.
Okay. Then
Got to control it here.
got it.
Well, you got the app. Close the site.
Which one? The site? You can leave the site up.
But if you want them to see it, you got
Oh,
to
then,
to that
okay.
screen.
Okay.
All right?
Mm-hmm. Okay. So basically, we were at security analysis. We run a mortgage fund. If we wanted to look at a particular mortgage, we could pull up a yield table. We could change our prepayment estimates. And change our price. We can do option adjusted spread analysis. Which, have you gone into that? Now, the one thing about when you start to do some analysis on Bloomberg, you are still also dependent upon sometimes their analytic system. When you do OAS analysis, you're using their prepayment model. We may not use their prepayment model. You can also create your own customized prepayment forecast. So, for example, this particular security will prepay at a 17% annualized rate for 2 months, drop to 15%, go down to 12, and then finishes at 20. Just type in that vector. And we get a yield. So you'll be able to, with Bloomberg, you'll be able to, in any different marketplace, you'll be able to evaluate securities.
Craig, do you have an opinion on this security? Could you pull up what the prepayment model is and tell us how you think it's different with whether you would be a buyer or seller?
I'll pull a different one up. This is the database function of Bloomberg. We can also look at some loan characteristics. This particular security is 100% New York. It was originated in 2003. The weighted average loan size is now $212,000. (71% of the loans were refinance loans. 29% were purchase loans. This security was, the loans are 92% owner occupied. But what makes this security really unique, and we happen to own the security, 21% of the loans are multifamily dwellings, 100% being in New York. Now what that means is that multifamily loans do not have the same availability as to refinance as other loans. So when we bought this security, we thought that the security would prepay about 50% slower than securities that were just generic. And actually, the street had priced it to prepay about 20% slower. So when we bought this security, because of the underlying characteristics that we saw in these details, we were able to actually generate about an extra 500 basis points a year in cash flow yield. So these aren't just statistics. They actually are statistics that you can use to make your investment decisions.
When you typed it in, that FNR and then DO3 2003, what is FNR? What is 74?
The way that you're going to navigate through Bloomberg is through the ticker system. So if you wanted to know what the acronyms are for the different marketplaces, you would hit the mortgage key, which is F4, and hit TK. And it basically tells you what the ticker symbols are. So if you were going to pull up Ginnie Mae collateral, it's GNSF for Ginnie Mae single family. Now this is collateral. FNR is Fannie Mae CMOs. FHR is Freddie Mac CMOs, and GNR is Ginnie Mae CMOs. And I'm not sure where that shows up. But if you ever need to figure out what the ticker symbol is of something, you would just type in F10 TK, which is basically index ticker, and then just type in what you're looking for. If you're looking for IBM, if you're looking for Fannie Mae, if you're looking for Southern California Edison bonds. If you wanted to know what credit derivatives are, if you just type in credit derivatives, it'll give you the category number 1. It will tell you what the functions and the analytics. So if you would type in number 3, it will really narrow down your search. So if you wanted to do, if you wanted to look at, credit default swaps or structured notes data. Is this information too specific, not generic enough? What would you,
Craig, can you pull up historical information? Suppose I want to see what the stories were a year ago today.
You can. It's not as easy to do, but you can actually do that. You actually have to page through it. So I'm not really, we've never tried that, but I'm sure that you probably can. If you would type in like NIFED, So these are all the most recent stories of the Fed. If you just page down, if you hit 50 page forward, it'll page forward 50 pages. Unfortunately, it only got you 2 days. So it's going to take a while. It has, what type of security would you look for? Okay, so IBM, F8, and then you would hit HTR, which is historical total return. Actually, TRA. So if you can, unfortunately, it doesn't break it down on a daily basis, but you can take any time series and you can create. So you could say, well, what if I owned IBM for 5 years? What was my return? If I owned it for a month? This is the part of the system that it was really the catalyst for the Excel downloads. Because what you would do is you would dump all the IBM pricing into an Excel sheet, and then you would just create a series of daily returns. So I'm not sure if you can actually do that or not.
I just want to comment. One of the things that I find very helpful to me, because I'm not well versed in this, I haven't taken Dave's classes. If I'm looking at a screen like this and I don't really understand what it means, if I just hit the help key, it will give me an explanation.
That's true. And actually, if you hit the help key twice, you can send a question to Bloomberg Texts that are 24 hours. And if you ask them a question, they will respond. Sometimes it can take a half hour, but it depends how hard the question is, who you get. You have to have a question.
Well, just looking at it, you say you use it on a daily basis. Is it something that, like, you try to spread everyone in your firm to do the same thing, or is it pretty much just a personal preference that you've been using it for now for about 20 years?
Actually, Bloomberg has a new function. It's called Launchpad. Launchpad means that you can actually take different applications of Bloomberg, different monitors, different news services, and you can populate your desktop. We run on 4 screen systems. So we have 4 18-inch monitors on our trading desk, each of us. So we will basically have news stories making a box around and some analytics in the middle. Then we'll have markets on another page. So you don't just stare at one screen. You can pretty much, you can have a launch pad and have 20 different securities markets up as you're doing analytics on the 2 screens that are more dynamic.
Can you pull up Phil Gross's holdings?
Possibly. I don't think I know how to do it. Now, you can pull up holders. So if you went to like IBM Equity Go, you can actually pull up who the holders are. So obviously State Street Bank, and they're a custodian, so it doesn't mean that State Street owns it for their own account. So normally what you have to do is you have to really look and see. If it's a custodian, it doesn't really tell you all that much information, but many times it can tell you who the largest holder is, and that may mean something.
I feel like somebody just originated security and it's about to become public. Can you like do some research on that before and see if that's something you're interested in buying or something your firm would like?
There are IPO functions. I don't necessarily know what they are off the top of my head, but what you would do is you would essentially go to the index TK and type in IPO, and it will list all the functions, all newsletters, all research reports, any articles that were written in Bloomberg Magazine. They keep archived, and they'll walk you through it. But yeah, there is a big function for IPOs. Bloomberg started off as a bond box. When I started using it in 1987, you could basically pull up mortgages and treasuries. And it was really in the 90s where Bloomberg started to get involved in the more esoteric securities. What Bloomberg really does is it levels the playing field. It means that if you're sitting in the library at Library West, or I'm sitting in Denver, Colorado, we have the same information at our fingertips that somebody has on Wall Street.
I've got a question for you.
Yeah.
You may need to navigate or write a date down before. But the automakers were downgraded. So a lot of people argue that they don't, that the announcements of that they're downgraded to John for their credit rating downgraded is anticipated by the market. So that it really doesn't move much on that day.
Mm-hmm.
And we go through Ford or GM and get the dates of the downgrades and see how the equities moved and the bonds moved on that day.
You know, you can do some you can do some spread analysis. I haven't done that necessarily.
The prices, we could just look at Ford corporate and then
Sure.
yeah.
Before you do that, can you do this holding search for treasuries as well? Is it only just for?
I don't know if you can, but I can try. Yep. This is the current 10-year. If you just type in the security, so this for the current 10-year would be CT10 Government Go, and then just on the main menu, it has a function for holders, and then it will get you. If you wanted to do analysis on the yield curve, you can basically just pick your dates. See how the yield curve changed. So this is so you can see that the 2-year Treasury is up 40 basis points in the last year. The long bond's up 3 basis points. Kevin Fredericks, who's a mortgage trader that we do business with, is a graduate of the Masters of Finance program. Why don't you? What do you with Bloomberg? What are the things that you look at as a trader?
The holder screen you asked. I think that's listed for mutual funds and insurance companies that file a Schedule D, I believe. Not all holders are listed. It is a portfolio function that we use often with our customer base. So whenever we a security, we know who owns it and who to contact if we do have a market for any activity. Screens that I use on a daily basis.
Wait, you got to be in the business. This is like a
Oh.
first presentation I've ever had. Guy just walked in, Florida State Seminoles, walked in the room and also get Kevin
Undergrad.
graduated from the MBA program actually in 1990.
97.
He thought I was 86.
And he works for Stevens.
Stephen Zink.
Stevens Inc.
Yeah, I think about it.
And he's a bond trader in the flesh. And the reason that he knows Craig very well is because he covers him. And maybe while you guys get ready, you can talk a little bit about what that means and that relationship.
Yeah, depending on how this whole thing goes, is whether or not he gets the Georgia tickets in my briefcase. He's a customer. When I was fresh out of grad school here is when I got involved. I started out as an analyst and a salesman for mortgages, and I stumbled across Craig and his partner from a referral from another customer. And back then, what did you have under management? Maybe 10, 15 million?
Yeah.
You're being paid too, so be careful.
Really?
I think 25.
25? Does this have to be approved by the NASD? So I can't talk about any bonds specific. All right, well, we'll figure it out. Close enough. And that's it. I've been trading mortgages since then, since '99, and try to do a good amount of business with Craig. He's involved in more esoteric securities, mortgage-backed derivatives, which is what I cut my teeth on. And we live and die by Bloomberg. We use some other tools as well. But I even have it at home. Got the message system on BlackBerry in my pocket. And really, most of the information that we need to know about the securities we're dealing in, we get off Bloomberg. And it probably takes at least 6 months to a year of being involved in your job to knowing just everything that this has and how you can utilize it most efficiently as a tool. I don't know where you began or left off.
We
since
were
I
just
started
going over, security analytics. So I just pulled up basically 2 Eurodollar contracts, and essentially did HS, which is historical spread. So you can do historical spread relationships, which is real important. I mean, a lot of security analysis, where things are going to behave tomorrow, a good starting point is what took place yesterday. So a lot of times we will look at the historical behavior of a market just as a starting point for how we're going to formulate our forecast.
Which is the live keyboard?
This one.
You mind if I pull something?
Go ahead.
How do you methodically search Bloomberg for mortgages or mortgage derivatives that you like?
Well,
Or not in you in particular, in general?
typically securities that are specified are not generically on Bloomberg. The analytics of the security are on Bloomberg. But if the security is available to us, we will send a message from Kevin or another Wall Street firm saying that they have the security that they'd like to offer out. So there's bid lists. Like typically now what's more common is when an investor's going to sell, he puts it out for bid. So he says bid in competition at 2 o'clock, and he'll list 5 bonds. And he'll send that list to 10 dealers. So every dealer has to submit its bid at 2 o'clock. That information will then be sent from Kevin, who's seeing the bid, to someone like ourselves who may buy one of the bonds.
Or sell.
Or sell.
This is an example of the type of security that we traffic in. There's a lot of information on the screen at once. A lot of it is the specifics of the underlying mortgages. Other than just a yield table, which tells you a lot of the basics. Screens that I use the most are CLC, which is collateral composition.
We went over that.
Oh, you did? Mm-hmm. Okay. What about historical speed changes?
We've done that.
Okay. We've had a good rally over the last couple of days. A few weeks ago, over the last couple of weeks, we've been selling off. If you notice in the center column here, it's the consensus speed of the security, which the street estimate is 160 PSA. With the move we've had of about 12 basis points over the last couple of days, this will change. So to get an idea of where it's going to go and how it'll affect the average life, I often pull up the HPF page, which isn't lining up with what they had in the consensus there, but it's easy enough to see the change here. It just might be the defaults on this system. If you look at the center column where it says 0 basis point shift, that's just a speed, the prepayment standard. The PSA is what it's referred to. That is used to calculate the average life of the underlying mortgage. And you can see over the past couple of weeks from the 6th to the 27th, it has ranged between 289 to 263, I guess, is the low just a couple days ago. And just to show you the difference, oh, see, this one, the consensus is on the far left. I'm used to looking at my screen where I have it in the middle. But if you want to look at the changes in average life, 265 was the low estimate. What did I say the high was? 285? 89. 289. It's a difference of about a year. And then if you look at the payment window in the bottom row, your cash flow is altered by about 2 years, just in the change that we've had in the past couple of weeks. So it's some of that information that we dig into on Bloomberg to see what will happen.
But what Kevin didn't tell you is we sold him this bond at 97.5.
which his partner admits was a very good bid.
And you can see the difference between 265 and 289 is about 50 basis points. So obviously prepayment speeds really matter, but the ability to manipulate or change prepayment speeds, see how a security behaves with changes in prepayment speeds is very useful, at least for mortgage investors.
What type of professional uses Bloomberg on a daily basis?
Well, all money managers, all salespeople, all traders. I'm not sure corporate finance if they're using it on a daily basis, but some of the information. So I would say Wall Street firms and institutional investors are probably using Bloomberg on a daily basis.
Analysts as well. A lot of the information that they need, especially in equities, is available on Bloomberg. I know there are some other systems and tools that are out there. Predominantly, though, we use Bloomberg not only as an analytic tool, but as a communication vehicle.
So when Kevin bought this bond from us, he basically sent us a ticket. So it's also a reconciliation tool for your back office. So he prices the bond at where he bought it so we can confirm to see that we agree with the figures that he has. And then he just messages that to us, trade ticket. So this is something that is standard on Wall Street now. All confirmations of over-the-counter trades are done via Bloomberg.
And it helps you with something that's quite helpful, actually. On the sales ticket, you can see it does a lot of the math for you, so you don't have to worry about the little mistakes with the factor, the current dollar face, and the accrued interest. One thing that we used to have to do here in grad school, I don't know if we still have, do you calculate effective duration, Macaulay duration by hand? All right. 35, go. It's up there at the top. It makes it a whole lot easier. Just
you don't even need that class.
well, no, you do, because I still pull out the notebooks to refer to it. But that's something that I look at quite often. It's not an end-all, be-all on where this bond has value. Actually, the bid would be higher than 97.5 now. Market's up. And you can see there at that bid price, the OAS is negative. However, the optionality in this bond and the callability, sometimes assets trade with a negative option-adjusted spread.
What about QY, right? You can also, on fixed income securities, just do a QY or a YA, and that will give you duration, yield, cash flow yield, yield to call. In mortgages, it will also do some OAS, convexity.
If you're looking for something to hit a particular yield or, say, prepayment speed, are you able to set an alert so that the structure?
One more time.
Are you able to set an alert for a particular field or metric you might be looking at?
I don't think so. Typically, what we do is we just communicate to Kevin via a message that we're looking for X type of bond. It does do the system also does searches. What was it?
See, I was asking what room. That was from here. I was hoping you'd pick that up. I've been walking around.
Which one?
And I was asking what room.
Sorry. So you can also query a specific security. So if a security was messaged to you 10 days ago, it basically creates an electronic file. So you know where I can type in Kevin's name and it will list all Kevin's messages. I can type in a certain bond. It will list every time someone sent a message regarding that bond.
Is your question, though, if you're looking for certain parameters of a bond or certain characteristics?
Yeah, say if you're, like on the equity side, if you're looking to hit a particular price point, then you want it to be immediately.
Yeah, you can set up alerts. I don't think this is set up for Launchpad, which there are other alerts in different levels. You can have messages come to you. You can have alerts sent to you if if equities do reach certain price points. I mean, for all markets, I'm sure you went over BBT1. They have all live treasury pricing on here now, and something they just started this year to compete with a, where's the mouse?
No, you have to use okay.
Well, to compete with TradeWeb, which is another tool we use. They now have TBA pricing on here.
Left.
Figured it out. And these are all current mortgages. They're not actual Q-SIPs yet in individual bonds, but this is the forward market for mortgages. For example, in the upper left, you see Fannie 30-year 5s for November are 96.77 plus. That's a pretty accurate indication of where the market is now. If we had access, you can actually do live trading off here where you'd just be able to.
We're not familiar with it. You may walk through a TBA market and give an analogy to a one-issue market.
Okay. Basically, in what I do, mortgages start with when a borrower takes out a loan to buy a home. He goes through a mortgage banker or broker or bank, and they agree to take out the mortgage. When I say TBA Fannie 5s NOV, these are 30-year 5% paying mortgage-backed securities that have yet to be delivered or originated. Now, come Good Day November, which is typically around mid-month, these can either be delivered as new issue, loans that were just originated, and to get a 5% mortgage in today's market, they have to pay points up front. Or it can be a seasoned mortgage up to 30 months old. But this is how this roll market is really just a financing tool and what helps out lenders and makes the mortgage market what it is. This is what Fannie Mae and Freddie Mac depend on to help with the financing to keep banks, to provide banks with ample capital to issue new loans. Is that your lunch?
It's a forward market. There's a prorated slide in.
Correct. And if you see the mouse out between November and December, the offered side is here on the right. Like here in November, if I wanted to buy Fannie 5s today, it's 96.7 plus. But in December, it's 96.7. It's a plus difference. And that plus of a 32nd is considered the roll between the 2 months and is purely a financing vehicle. If I were to buy either one of these today, I wouldn't take delivery. They wouldn't be sent to me, the November issue, until mid-November, roughly around November 15th. And December, not until December 15th. You say, oh, well, December's cheaper. No, because it's 1 month less of coupon that I'm getting. And the difference between the 2 months is only a plus because Fed funds is currently at 5.25. This is a 5% coupon. It's actually negative carry. While there is some time value there of the coupon, it's not really great carry. If you go up to some bigger coupons, you see how the roll gets to be bigger, like 6.5s here. It's 26 plus by 24 plus. And that 2 ticks is the value of that 6.5% coupon that you're collecting between November and December. Half the jargon, if you start in a field that you're going to use Bloomberg, whether it's an analyst or money manager, half of the jargon and headache during the first 3 to 6 months is just learning what's on here and how to access it. I think it's great you have access to it here. I wish we did when I was in school.
They didn't have Bloombergs when I was in school.
A big book.
Questions?
You mentioned that there's other programs you use aside from Bloomberg at times. In what circumstances do you use something other than Bloomberg?
I do all my TBA business. This is how I hedge for the most part. I do that on TradeWeb. TradeWeb is a live trading system for treasuries and mortgages. Bloomberg is just, in the last couple of years, started offering similar services to compete with TradeWeb. Bloomberg owns the data information exchange in the street for the most part. Bloomberg Telerate, but Michael Bloomberg's done well. Just built a nice new building up off Park Avenue that's pretty impressive. And they're trying to be the end-all, be-all to everyone. Hopefully, I want there to be some competition just because I got to pay for this every month. If there are some other services that come out that offer the same thing, then I think it'll keep prices a little more in line. But right now, Bloomberg is what we use primarily. However, for executing trades, I use TradeWeb. For analytics, I also use YieldBook, and then on Lehman Brothers' webpage, they have an analytical tool called Lehman Live. And a lot of it is the same information, but just extrapolated in a different way. For example, OAS models. Bloomberg's OAS model, I think it says on here.
Negative.
Yeah, it's because you sold it, Rich. I forget how many paths they're using in their Monte Carlo simulations, but they're using a
32.
Yeah, 32 paths. They're using a weighted average of all the street's prepayment estimates. They take the analyst estimates from Goldman, Lehman Brothers, UBS, Morgan Stanley, and they just get a mean number. If you go and use Lehman's system, they're going to use just their estimate. So it might be the same calculations, but just starting off with little different numbers. And people are falling asleep.
Yeah.
Could you go into a little bit what you do as a trader or as a mortgage trader?
Yeah, yell at people. We try to match buyers with sellers. I work at a firm called Stevens Inc. We're a regional dealer, not a bulge bracket firm where we're bringing deals front to back. What I do is I look for, in my sector, structured products, CMOs, I look for pockets of value and try to match buyers with sellers. This is an example of a bond. Did I buy this week from you?
So you have an inventory of those, right?
Uh-huh. No, I sold them. Bought them cheap. I bought these. Craig needed to raise some money. I'm joking with him. He knows I didn't buy them cheap. He needed to raise money in one of his accounts. And he asked where I thought this would trade. And I gave him an indication. And then he figured out exactly how much he needed to raise. I gave him a firm bid, and he sold it to me. I think we owned him for about a day and a half. And we found another customer who liked the security, and then they bought him from me. That's essentially how I'd like it to always work. You know, buy low, sell a little higher between two accounts, and it gets easy, or it's easy that way. What I do on a day-to-day basis is try to match buyers with sellers, buy bonds that I think have value or are cheap, and then offer them out to our customer base.
Who are your customers?
Banks, money managers, insurance companies. Today, I wasn't even in the office for this, which makes it even better. A salesman had a customer that was looking to sell 30 million of this. We had another customer who was buying these types of securities. Might take a little bit to find this information up there. You don't have a pointer, do you?
You have to use mouse pad.
Oh. 5% coupon. A 30-year 5.5s. And that 20 right there is the Walla. That's how many months old the collateral is. And we had one customer that was looking for discounts off moderately seasoned 5.5s. We had another customer that wanted to sell 30 million of this. So we determined where the customer that owned them wanted to sell, and then we just tried to see if the customer that wanted to buy them any higher. We wound up buying them at 97.23 plus. Initially, the customer wanted to buy them at 97.5, which was a little too cheap. Customers often start. We all do. I mean, you try to. You have a dream price, and then what's realistically going to happen. But just analyze individual securities, speak with our customer base, try to determine what they're doing. This was a money manager that sold and a bank that bought. Another screen that I looked at. Oh, go ahead.
When Stevens Inc. is a regional
Correct.
player, does that affect the type of securities you have in your inventory or the type of customers you're looking at?
Both. We deal with a lot of Tier 1 accounts, but because we're regional, we deal typically with smaller size. Usually, between my pass-through trader and I, we have about 100 to 150 million in stock, as opposed to UBS or Greenwich that probably has 2 to 5 billion in stock. However, they deal a lot more with new issue and with larger size. A lot of bulge bracket firms out there don't have middle market desks to handle the Tier 2 and Tier 3 accounts. They might deal with customers, whether they're governments or regional banks that buy blocks of 50 to 100 million at a clip. Our customer base is just typically smaller, and we deal in a lot of smaller pieces and try to get better execution on those. A lot of times, like for the piece that he was looking to sell, a lot of guys wouldn't have wanted to mess with that size because their client base buys larger blocks.
We would not have even thought about going to UBS or Salomon Brothers.
It's, think of it like the bulge bracket firms are the supermarkets where we're a convenience store. Although we try not to have prices higher. Yes?
The general question, either one of you can give your opinions on it. Greg, you mentioned that there are some web-based Bloomberg certification programs. I'm curious, could you give us a little bit more detail on how difficult it is to get those certifications and how valuable they are in the financial job market?
Well, I'm not that familiar with the certification programs. Bloomberg has a function. If you go to Bloomberg.com, a lot of the information, not the analytical information, but the data itself is on Bloomberg.com. They have a function called Bloomberg University, which is BU. And Bloomberg will have seminars throughout the country. There was a seminar in Denver on Tuesday. And it will have multiple sessions where it'll be an introduction to fixed income, introduction to equities, more advanced, evaluation tools. I'm not sure exactly what the certifications are. I do know that the difference between the students at the University of Florida and the students in Wall Street, and I said this earlier, is very slim. Or the students in Ivy League schools. The difference is the proximity that they are to Wall Street. So a lot of the students there, their parents are either on Wall Street or they can get internships. What Bloomberg can do for you is really bridge that gap. Really eliminate the disadvantage. The tools that this machine is the machine you will be using if you get a job on Wall Street. If you figure out how to use it when you go in and interview, you'll be able to impress upon whichever firm you're interviewing that that you have an aptitude for this particular, for the investment field. So that said, I do not know exactly what the certification is, but if this is the machine that levels the playing field from a regional dealer to a primary dealer, and it also levels the playing field from a graduate student or an undergraduate student at the University of Florida with an undergraduate student at Princeton. And I can't impress upon you enough how valuable this tool can be in helping you really launch your career.
Important things, too.
Bloomberg Sports, they have betting lines. If you didn't know what the line of Gators were, you could figure it out.
Where's page?
You got to hit function.
Sorry, maybe I have bad habit. But everything you want to know, everything you talk to about with your customers.
13 and a half.
Whether you're in equities or fixed income or even just an analyst. Just about everything is on here. From news, I don't even read the paper that much anymore. Most of the top stories are on here. If you have anything in particular you're looking for, you can go to...
we already did this.
Oh, you did?
Mm-hmm.
And then menu.
Literally at the end of a trading day, there's no need to actually watch the news. Because anything that happened that's not local, you probably already heard about.
And with 4 of these screens up in front of you all the time, you can barely see this ticker at the bottom. But stories continually scroll by there as they catch your eye. Actually, with the Launchpad function, like on I have 4 screens up and then a TV in the corner even, in which they're continually reading the news stories. The amount of information that comes over is really kind of boggling.
Stories, Bill Gross will be interviewed on Bloomberg. It's archived. So if you wanted to go and view it, there's a media function where you can go and look at past stories. Yeah.
Question. As a dealer, do you ever actually broker deal, or do you always take ownership of securities?
Try to broker as much as I can. No risk. It depends. A lot of times we act as the bid side of the market. If we can broker, we do that quite a bit because we all are a smaller firm. I think that's the advantage we have as a smaller firm and more nimble a player is we have a couple analysts that aggregate every mortgage security that we see offered several times a week, and it is fed into a database. And if Craig says he's looking for inverses off 6% collateral, I can do a sort in a matter of minutes and find a dozen bonds out there that might fit his parameters. And then he'll ask who owns them, and maybe or not I tell him. Usually I do, and he'll tell me why his Lehman coverage stinks. He hasn't heard from him in 6 weeks. And he'll do the trade with us instead of them if we provided value and sending that. Usually the difference in price execution, the trader that owns the bonds has a level that he's going to sell. He'd love to sell higher, but he's typically not going to sell lower. To answer your question, if we can broker, then we will. I'd say it's probably 30% of the transactions we do are brokered.
And from our standpoint, if we need liquidity, so if we have a large piece that we need to sell now, we may have to go to a dealer that will take them down for their own inventory. Typically, for the riskless trade, though, the larger firms will have a larger bid to offer spread than a smaller firm. They have a lot more overhead. So if we don't mind that Kevin's going to show our bond out to another account, we'll work through Kevin because we know that the larger firms will probably require, they may want to take it down, but typically they will work for a bigger bid to offer spread. That's a plug.
Well, the larger firms are typically going to want to buy on the bid and sell on the offer. They're not going to work at brokering firms. They want to make the full at brokering assets. They want to make the full margin. I want to get as much flow in trades as I possibly can. The information and the interaction between customers is helpful. So if Craig has a bond that he wants to sell at 99 and the street bid is 98 3/4, but I've got a customer that'll pay 99 2, we'll do that trade all day long. And it's brokering. It's a much tighter margin and bid-ask spread than might be real in the market if he were going to sell and sell on the bid. But that's just part of the value we try to offer to end accounts. Like he mentioned Bill Gross, and I just went in here. You can look up people. This is everything the man has had to say in the past. Wow, it's only been a few days. He said a lot, or at least he's quoted a lot. And some of these, like where you see the speaker, that's actually a recording.
It's on this one though.
Oh, is it? I'll turn it off. Can you tune it up?
Yeah. This was my first question. So, what other types of questions?
What would you use Bloomberg in the back office for operations?
Well, it's a great reconciliation tool. In the equity markets, they actually now have, I think some clearing functions are now performed via Bloomberg. So typically, the person in my firm that settles trades will use Bloomberg to confirm with the street how much we're due a security that we just sold or how much we have to Yeah, I'm not available. Which one would you try to pull up?
Can you log on? Can I log on here?
Yeah.
I'll show you, because who asked that question? We use Bloomberg's trading system, and I use it as a history.
You got your card?
Yeah.
Hit escape.
Where's
Just hit login. Just do it.
Oh, it's a pain in the neck. And then when you travel and you forget
You
it.
have to cut my thumb off, though.
Yeah.
Actually, Bloomberg is a little bit. It's a biometric reading device, and it's a fingerprint. So from any internet connection anywhere in the world or any Bloomberg terminal, we can literally log in and have it operate as if it's our own Bloomberg, because we customize our own Bloombergs. That it makes it a lot nicer that we're working in our own environment. So if you happen to be on the road, you can go in through an internet, or if you're at somebody's Bloomberg, you can type in your login and username, and then you have to basically get an authentication. Yeah, Bloomberg wants each user to basically be unique. So with Kevin's machine, there is no generic username or password. He has to log on every day, and he has to use his fingerprint. So what they really don't want is a firm to have one Bloomberg and have 20 users. The reason why at the library they allow that is because it's obviously, as Bloomberg pointed out, that all college students are potential Bloomberg subscribers down the road. Plus, it's great publicity for them. You having problems?
Maybe I can't access it. I was going to show you what we use for back office. Bloomberg has a Bloomberg trading system in which it does log and track. And
what's that? Oh, that's you.
Yeah. No, I'm not allowed access from this terminal. From a back office standpoint, they get automatically updated and then reconcile with Bloomberg whenever there's a factor change. Like we just went over month end. All bonds that settle today, T+3, corporate settle on November 1st. With mortgages, there's a monthly factor because they're monthly principal and interest payments. So if I bought a bond yesterday at par that settles for 10/31, it would have settled for the current month under the current factor. However, anything I did today settles in November, and the factors will be changed. Bloomberg notifies you of this and then helps reconcile with just the math of what money comes in to properly adjust for the new factor once it comes out in November. Because even though we go over month end, as of today, the factors won't be out until the second week, or what is it, the 5th business day of November. So Bloomberg is very helpful in that regard in tracking everything. My trading assistant has all the records, and I was trying to show you her screens. I can't get on there.
Out of curiosity, how much is Bloomberg run typically?
I think it's $1,350 a month.
Really? I think we pay more. I don't know. Because it's an issue we have with a lot of salesmen. Depending on what their level of production is, they have their own. That's one thing that we do that's different at a lot of firms. But guys that are pretty young and don't have a book yet, 2 guys will split it. And part of that is because you used to be able to have one Bloomberg and have a bunch of people log in, and it wasn't necessary for everyone to have one at their workstation. But because of what he just mentioned with these biometric tools, Bloomberg won't allow that anymore. They want to track each user. I thought it was like $2,300 a month, but I'm not certain. I just see it as an overall expense for the office, not individually.
And what's become kind of commonplace is called soft dollars, where if you do enough business with a dealer, and it typically doesn't happen as much in mortgages, but it happens in new issue corporates or in equities where there's a commission. If you do enough business with a firm, you have to do a multiple. Let's just say that Bloomberg's $1,300 a month. If you did 5 times that, they would pay for your Bloomberg. So a lot of the money managers actually do soft dollars, where Bloomberg is paid for them.
Like, he was going over a lot of the screens. The hotkeys that I use, for example, there's a Treasury market, just a calendar, so I know if I should be in the office or not. Yield curve. This is different markets with where with euros and funds. This is agency issuance, callable agency, the debt that Fannie Mae and Freddie Mac are offering. Eurodollar future, did you go over this? No. But it's pretty much endless. If anything is of interest, please just stop. Currencies.
What kind of research is available from Bloomberg besides just like actual numbers? I've heard that there's actual reports you can pull.
Like Merrill Lynch, everything they have.
Is this yours or mine?
This is mine. Which key is the message key on here?
I don't know. I just do MS. I just type it in. MSG6 or it's MSG6.
There's a specific Bloomberg keyboard that they have that you get used to, and things are a little different on a laptop. That's why we're hunting and pecking up here. For example, this is a bunch of the dealers that I deal with, and a lot of the types of bonds that they own that are on here. For example, Greenwich derivatives, if they've updated it. Last updated 2 days ago. They were right on top of it. But there is a lot more. There are firm-specific pages you can go to. It's much like the internet then, where a lot of things are interactive. If you can think of it, it's probably on here. If there's anything specifically you're looking for.
Let's say you wanted to find a housing report or something.
Okay. HSST is housing. You can look up existing home sales, and it will give you, you can go to any one of them, say existing home sales in the South, type in historical, and it will give you historical readings.
Are there commonly explanations of what's there? So, for instance, it had a bunch of regions. Is there something that will tell you what they define as the South housing market?
Typically, if you hit DES, it will always describe the function that you're on. So if, existing home sales is ECSL, index, just hit DES, and you still have to go a little bit. Well, that's condo sales, but.
If you hit menu, I know it takes you back. You could always hit menu then and go back to the full menu. The acronyms and pages they have are endless.
That's a description page.
So economic statistics, we write a lot of, our newsletters are very economic driven, and almost all of the information comes off of Bloomberg. I mean, Bloomberg will tell you, there's statistics in here like the major airlines, what percentage of online arrivals. It's really mind-boggling how deep the information goes.
Oh, yeah.
Hopefully not that often. We rely on it, but they receive the reports. Obviously, a lot of the statistics come from the Bureau of Labor Statistics. If you're doing, so it's only as good as the statistics that they get. But occasionally, like in the morning, we will go to the ECO page, and that is the economic statistics of the day. As they are released, So this morning GDP came out at 8:30. It flashes. Now, there have been several instances, not many, where the release was wrong and they have to revise it maybe a half hour later, but we pretty much rely on it. You'll see the markets trade accordingly.
And you can actually get it, I was going to play around with it, but it'd probably be over here. You can get it to where it will
talk to you.
And when the economic releases come out, it's the kind of eerie computerized voice that says annualized GDP 1.6 versus survey of 2.0. A lot of guys think that's funny. You hear that all throughout the office when it comes out. It's kind of creepy. Did you have a question?
Pretty much asked. I was wondering if streaming data, like you're looking up information on fixed income securities, you don't have any problem with that being inaccurate. You were talking about economical information, but usually you can depend upon the number that you see provided by the market.
Yeah, well, in mortgages, I mean, I guess is the question you're asking is the prepayment data that they show on Bloomberg, do we run the risk that it's wrong?
Or the economic announcements that are made?
No, what Craig was referring to, because his question was referring to the economic announcements, but I wanted to know if the numbers, the hard numbers, the data that you're depending upon to your business. Like, have you found any instances where you thought that might not be accurate? I don't know, you were just looking at the exposure,
You know,
and you said that it's something you know what you saw.
There's sometimes a timing lag, like prepayment estimates. So if you have a bond that changes in average life, that's very callable. And if suddenly we have current coupon mortgages go from, say, 6.25% to 6%, they move that much more in the money and can be that much more callable. Prepayment estimates on mortgages aren't going to change instantaneously. It's usually over a day or 3 days that they, it'll catch up as the analysts write their new expectations. So sometimes you have to act on the data before you actually have it, knowing it's going to be there. It's not streaming, it's not instantaneous, where mortgage prepay estimates move tick for tick with the market. A lot of, like with all analysts, the trend is their friend. If rates are going higher, they're going to say prepayments are going to be slower. And as we rally, suddenly all the bulls come out, and you hear from all the people that say that prepayments are going to pick up as refinancing picks up.
But basically, Bloomberg is just a data service, and they buy this data. So what we used to do in mortgages was we would buy tapes, and they were, literally tapes, and they would be prepayments of all the pools, and it would be on a monthly basis. And then at the firm level, this was in the late 80s, we would have to maintain an entire database. So what Bloomberg's doing is just buying from the same source, but they're just creating a much larger and maintain it on a historical basis. This is index TK, and if you're ever confused of where to go or what you're looking for, just type in a topic. Here it says yield curve or balance sheet or IBM or credit default swaps or any question that you have. And literally, if they can find a match in their database, they will either show you a function that's an analytical function or a story that's been written on it. And you'll be able to find so much. I mean, it would take an entire year to probably take a course in Bloomberg and learn almost all that's going on. And we learn new things all the time.
Then there's also the pesky help key, which gets you an instant chat with some Bloomberg tech who may or may not have a clue to what you're talking about. But they will usually respond to your question in a timely manner. The only thing is, once you get off this chat window, you're probably not getting the same person back. So if you don't resolve your issue, you're going to have to start over at square one.
Time lags. How much of a time lag are you talking? And does that depend on what information you're looking for?
With the prepaid estimates? Or
Or any of the other information?
It depends. Bloomberg stuff comes right off the AP wire on news headlines. I mean, this is scrolling news headlines as they come across.
But then the trades and all that?
The trades are pretty instantaneous. A lot of it, we use Bloomberg for a lot. Which key is the message key?
It's the same as if you're an equity trader, there's two ways. You can either have live quotes or delayed quotes. It's the same as any quote machine. So you can literally chart something that's trading, like we trade Eurodollar futures, so we have real-time access to Eurodollar. If not, it's a 15-minute delay.
If you execute on TradeWeb, then it can be, on Bloomberg, then it can be instantaneous. We convey all the information, do the analytics on here, but we still execute either by this message system or by phone. And to just give you an example of how much we rely on this, like that guy coming across flashing up top, he's a broker. Everyone on the screen in red are people that I work with. Trying to learn this, but green is a customer. So this is as of 2:35. That's page 1.
You get more messages than us.
There we go. There's yesterday. 33 pages. Each page has 20 messages on it. It's a lot better than 33 pages of phone calls.
And actually, all your Bloomberg messages can be directed to your email. So I get a confirmation. So basically, anything that comes over on the Bloomberg system gets copied to your email.
And I could do a search here, like all messages from Brian's partner. That's the last thing I sent to him on the 26th at 1:12, which were some bonds I own.
So how many people here are looking to get a job at a Wall Street firm or be in the investment business moving forward? Show of hands.
How many had experience already in the field and don't want to go back? All right. What did you do?
I'm actually still working.
Are you?
I work with JP Morgan, private bank.
Okay. Here in Florida?
Yep, Palm Beach.
Good deal.
Can you talk a little bit about what makes a good bond trader, and in particular, are there people who have just not been able to master, Bloomberg, and then, if you rely on information and you can't find information, or you're looking at information that's actually wrong, and make sure it's on that basis?
I think you'll get two different answers.
You go first.
From an investor's perspective, a good trader to us is a trader that offers us the securities, knows what we want to buy, and can offer us the securities at an attractive level. So they're competitive. Sometimes the traders that we do business with may not necessarily be the most profitable traders. So what makes a good trader from a firm's perspective may sometimes be how profitable they are. What makes a good trader from an investor's perspective may be, how competitive they are in the business that we do.
Craig, are there characteristics that if the trader said X, Y, Z, you're just going, I never want to trade with this person?
We find that the majority of traders are ADD candidates. So not Kevin.
What are we talking about?
Basically, they have a very short attention span, and they go from trade to trade. So if we're looking to buy something on Tuesday, by Wednesday morning, we have to repeat it because they just don't remember. We'll say something Tuesday afternoon, and they'll show us something completely different Wednesday morning. That's not a good trader for us. That was pretty accurate, wasn't it?
I'm taking medication. Part of it is, I think, remembering what customer access are. You can go down 3 schools of thought here. A proprietary trader is a guy that can dissect whether it's an equity, whether it's the financial statements or cash flow table, and just find inherent value from a buy and hold standpoint. I'm a flow trader, so I have to be more plugged in to what our customers want, what they'll pay for it, and where I can buy it. Everyone would love to sell high and buy low. The art is reversing that and doing it the way that's profitable.
Kevin, how important is humor? You seem like a pretty funny guy. Is that a pretty important thing? You've got these relationships. And
Only sometimes.
But sometimes a sense of humor doesn't go over well with people. Some great traders are complete quants that don't even really have a great mastery of the English language. There's a derivatives trader now that, if I called him now, I bet you can understand 3 of the words he says, but he can type. And he gets a lot of the stuff done on Bloomberg. And he's very good. You know who I'm talking about. It's kind of a mix of all things. And depending on your seat, and the type of firm you're working for, it could be different. If you're an investor, then maybe a real analytical quant. It's better for the buy side. If you're on the sell side and you're going to have a lot of interaction with customers, I think we're a little unique. I mean, not all traders go out and hang out with customers. Just in the evolution, I started off in sales and got to know these guys. I think there has to be some level of friendship and charisma and interest in their business. I mean, he wasn't as egotistical when he only had $15 million under management. It used to be I did a lot of his business, and now, yeah.
Too many jokes. But the other thing is, you have to. It's a two-way street. We find that if a lot of times it's a relationship, it's a partnership. We can't do what we need to do without traders that work with us, and they can't do what they need to do without accounts that trust them. And sometimes that's lost, where everybody wants the last dollar on the table, and it's really just a zero-sum game. My partner and I both came from the street, so we understand the role that the street plays in our business. But it's not always that understood. I'm sure Kevin would tell you that he has some accounts that are much more reasonable than others.
Yeah. I think it comes down to from my firm standpoint. I mean, we're on the sell side. We're a broker-dealer. It's communication. And the more communication, the more plugged in we are to what our customers' axes are, what they're looking to do, and how we can help, the better off we're going to be and the more we're going to be able to help them. At the same time, if you're dealing with a very large hedge fund that is involved, say, in inverse IOs and they need to move size quickly, they might be very tight-lipped about what their needs are, what they're trying to do, because their actions could affect the market. We pulled up Bill Gross earlier on TV. You really think the manager of the largest bond fund on the planet is going to tell you, he was a poker player. Do you think he shows the hand before he gambles? So there is some cat and mouse involved in it. And some of it is being able to dig through the data and analyze numbers. And some of it's being able to dig through the BS and see what the real answer is.
So when you guys are making hiring decisions in terms of hiring a trader, or if you've got somebody here who's trying to figure out what they're good at and would I be a good trader or not, and what you said basically is, it's not just one size fits all. There's you can do this a couple of different ways. Any guidance that you could give these guys out here in terms of what are they good as a trader?
I wish I had a canned answer for that, because I know guys that are traders, that are quants, that are quiet, that are CFAs, and they're really good at what they do. And I know guys that seem like they're a couple steps off from selling hot dogs on a corner. And they're loud and they're boisterous and they fly by the seat of their pants, and they seem to be pretty good at what they do. It is understanding your product and communicating it, I think, with your customer base. That is key.
From the hedge fund side, typically we don't hire students to be traders. Normally the owners are the traders, or the traders are coming from Wall Street. So you have to gain that skill probably on the street. Does Stevens really look to hire traders as trainees, or how do you guys normally?
I fell into my position as a trader. I was the top salesman, and the trader, one got fired, one got into an argument with the boss. They said, "Hey, how would you like to trade?" And that's how it happened. Like the derivative trader at UBS, he was in grad school and took a summer internship with Bear Stearns and was convinced by a trader he was working with on the desk to not go back to school and stay with him, and he became his assistant and ultimately became a trader. They're all different avenues. A lot of the guys that I see at a lot of the big shops, the traders are young. Aren't you finding that recently, or are we just getting old? I don't know if they hire them right out of school or if they start out as quants. No one's usually not going to walk into any firm and they're going to give you a credit line and say, here, go put capital at risk. You're going to start off as an assistant, whether it's a trading assistant or a salesperson, and then you slowly enter the role. We have an analyst that's been doing stuff for us for years, and he's been analyzing the asset-backed security sector. And just this year, he started to trade it. And the training wheels are still on. He's not maintaining a book. He's helping broker transactions between customers in the street. I mean, he'll own a few positions here and there, but as the firm gets comfortable that we're able to generate revenue under this trading line, then their tolerance and his ability to take down positions will grow. It's just I don't think like on this jobs function. Let's just see. JOBS go. Sales, traders, brokers. What are they looking for in a trader? Junior program trader. That'd be equities. But if you want to, yeah, and I mean, there's just
it's mostly sales.
1 to 2 years of experience. This is program time. I assume it's mostly equities, but you can get a good idea of what folks are looking for there. I think getting involved in this business anywhere, you either start off as an assistant or a trainee, or through an apprenticeship or internship. It's not what I expected to do. I thought I was going to go into consulting. He's the one that talked me into this.
Anybody else have any questions? Thanks, guys.
I have major Bloomberg problems.